Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Monday, February 25th, 2013. Well, a very bearish day today in this market as well. Very similar type of candle as we saw with the equities markets, with the S&P 500. A trading day that where the buyers attempted to take control early, and this market rallied up to the 133.20 level. That has been consistently a very, very important level of support and resistance for this market, and also attempted to rally through this highlighted yellow zone and found resistance just above there, with the market selling off in a very substantial way. Prior to that, the market tested down through that zone and found support at the top of the cloud, a doji type candle, and that did suggest that there was a possibility of the market rallying from there. But as we've seen, the market attempted to, but was sold off significantly, and highlighting the fact that in the higher time frame, the sellers are as strongly in control of this market as they are in this short-term time frame that we're seeing today. A very solid bearish candle with the market closing down towards the lows. The sellers are strongly committed. They have very strong downside momentum. They've made substantial amount of net bearish progress on the day between the open and the close. The only worry here is, have they done too much in one period? It is a fairly volatile trading day today, and there is a possibility of the market finding support down around this level here at around the 130.25 level that coincides with the bottom of the cloud. Now, in terms of the head and shoulders pattern that we saw form previously, and we had the breakout down below, the rally back up towards the neckline as I spoke about last week, and then the subsequent sell-off, classical head and shoulders behavior, and then the strong downside pressure from the sellers. The market has potential to meet its target, which is just down around 129.68. It has turned out to be a very, very solid signal in this market, and considering that this market is trading down around the bottom of the cloud and around the 130.25 level, might be an idea if you do have short positions to perhaps take some profits. There is a possibility of the market trading down to 129.68. We will need to see the sellers take control of this market again, and a close down below the cloud will mean a bearish market in the long-term time frame. We don't have any sign of that happening yet, but certainly the sellers are in strong control of this market, but it wouldn't surprise to see this market have a bit of a rest. So there is a possibility of that target being met, but strong support just down below where the market's trading. Now, in terms of the Fibonacci extension, this market is still in a first time frame downtrend, and we're examining the relationship of that to the previous time the market is trending down, and we have traded down through the 100% in a bearish manner, and now today once again traded through the 161.8% in a bearish manner, and that does suggest that there is a possibility of lower prices. So we didn't see the market capitulate down around the 161.8% area. Do remember, however, that for this market to test down to the 261.8%, which is at 128.67, we will need continued bearishness for the market to trade down below the cloud. In terms of the Fibonacci retracement of the prior uptrend, and here today we've seen a solid bearish close down below the 261.8%, it suggests that there is a possibility of the market trading to the 423.6% level at 128.93. So be aware of that if we do see a bearish breakout down below the cloud, that is our target, and that we do have a similar target based on the other Fibonacci technique. In terms of Ichimoku now, we have a neutral market in the long-term time frame, and this is quite a change of sentiment in the market. It has been some time since we've seen the market trading down within the cloud, and quite a while ago we saw the bullish breakout up above the cloud, a test to back within the cloud, and another bullish breakout, giving us a strong buy signal in Ichimoku charts terms. We have now seen the market trading down below both the Kijun-sen and the Tenkan-sen, then attempting to rally to those indicators and being sold off in a very bearish way, and that did suggest a strong possibility for much lower prices. But now this strong change of sentiment does suggest that much of this bullishness that we've seen has evaporated, and there's a possibility of the market breaking out down below the cloud. No sign of that yet. Let's wait for the market to test down to those levels. But neutral market in the long-term time frame, very strongly bearish in the medium and fast-term time frames. We had a crossover of the Tenkan-sen below the Kijun-sen some time ago. It was a weak signal, but that has been a good signal for this market, and for those that take those trades, potential places to take support would have been down around the top of the cloud, and certainly now within the cloud. For me, I didn't consider it to be a strong signal because of this strong potential support at this highlighted yellow area, and today we've seen the market rally to that area and be strongly rejected from there, so support has turned into resistance, but the market blew that area away in a major way previously when we broke out down below there. So basically a market that's neutral in big picture terms. Very strong support just down below at around the 130.25 level. If we do trade down through there, 129.68 wouldn't surprise, and then even trading down to 128.57. But a rally will find very strong resistance overhead, the 131.45 area, and then around the top of the cloud, 131.96, and then this zone, yellow zone, if we do see a breakout back up to the upside.